I guess we're live. Cool. Hey, everybody. Hope you're doing well. Welcome back to another weekly market update. Today is December 16th. Gosh, the year flew by this year. It's been a crazy bear market year, too. You're probably feeling it if you're long in the markets. And this week, after the Fed made their announcement, they basically said, hey, we're not afraid of continuing to raise. Now, I've been saying for a little while now that I think they're going to have to stop raising, but I've been wrong. But you know what? If you think about it, they're saying they're going to raise a little bit less drastically now, they say. But they're also saying we're going to continue the raising process. Now, the problem is they're raising interest rates on themselves because they're the ones that are issuing debt. And they're, going out short-term debt, which expires pretty quickly. And a lot of the debt is expiring in the next 18 months. That's going to have to be refinanced at a higher level because they're raising the prices of the Fed funds rate. So what's that going to do? They can't continue to pay more and more money. That means they have to print more and more money to pay it, right? Well, if they print more and more, we're going to get more inflation. So what they're going to have to do is they're going to have to lower. They're basically raising it to find an excuse to lower it. Because you know what? The Fed does what they do. What does the Fed do? They print money, right? They don't care about inflation as much as they care about printing money. They don't care about unemployment as much as they care about printing money. That's what they do. They use those other two factors to supposedly guide them, but the Fed has always overshot. So they're going to overshoot this time. They're going to raise too much. They're going to throw the economy into a recession. That's going to create problems for the market. Market's already feeling it, and so are you probably if you're long. So what does all this mean? Well, let's take a look at what the markets are telling us this week. And we'll go from that point. How about that? So let's see what we're showing here. Okay, so let's take a look at it. We start with our regular market. We are showing a red market, 4 red lights. That basically says you should be in cash, or you should be short, or you should be out of the market. But you shouldn't be trying to play this as, trying to pick the bottom, catch the falling knife as it's falling, right? You're going to get a bloody hand. No reason to do that. Wait till the conditions are favorable, and they are not favorable right now. If you're a breakout trader like I have been in tradition in my life, you want the markets to be favorable. You want the tailwinds to be behind you, not heading into the winds, right? So this is a tough time in the market to try to be a hero. So you got to wait till things bottom. It may not be as long as you think. I think we're closer to the end of the bear market than we are the beginning of the bear market, if you know what I mean. We've been in 13 months of a bear market. Sometimes they last a long time, and sometimes they end and you don't even realize they're ending. So we could get an upshoot Monday, Tuesday, Wednesday, next year, 2 years from now. I don't know when it is, but I suspect we're closer to the end than we are to the beginning. The market says we're red, though, so we got to heed that. All right, let's look at the NASDAQ. You can see the NASDAQ has now fallen below its 50-day moving average. That's that red smooth line there. It's fallen below that 50-day moving average. It's done it 3 days in a row. It's gapped down one of those days after the Fed made their announcement. So, it's not showing really good, excuse me, really good action. S&P 500, same thing. Came off its 200-day moving average, couldn't hang on. Now basically is down below its 50-day moving average, the red line, and the same thing, it can't hold it. The Dow, which has been the strongest one, remember the Dow was kind of pulling everything up over the last 4 or 5 weeks. Now they're kind of starting to diverge. So you're going to see the Dow start to catch up, or the other ones pull up a little bit. I think it's more the Dow is going to kind of go down. However, one green sliver of hope here is that this is making a golden cross. That's when the red line crosses the black line, the 50-day crosses upward through the 200. And that may be what brings the market makers back in. Now, I think there's a lot of tax loss selling going on right now. A lot of people have lost money. They're taking their gains. They're offsetting their losses. They're doing some what's called tax loss harvesting, which you should consider as well. See your accountant, talk to your advisors. This is education. This is information. This is not a financial advice, but at the end of the year, you should be looking to do some tax harvesting. Why pay tax on something, that you could take a loss on if you're eventually going to make money on it when you could book that loss now. But anyway, you have to figure that out on yourself. Watch out for the wash sale rules that the IRS has. But anyway, so the Dow Jones was the strongest. It's still the strongest. It's above its 50 and it's above its 200. So that's still slightly strong. That action, though, at the end, 2 big candles on high volume, not very good. All right. The New York Stock Exchange, same kind of thing. It's fallen below the 200, above the 50. I suspect it's going to bounce off the 50 or at least touch it and test it. The volatility index, the VIX, is off its bottoms, but it's not strongly off its bottoms. It's come up a little bit. It's moving back toward the mean. That's what it does. And so the market is saying, hey, you know, how convinced are you? Let me show you how convinced the market is. Now, let me tell you, this is an interesting thing. The market doesn't believe the Fed. The market doesn't believe the Fed. So if you know about bonds, this is the 20-year bond, the TLT, and the 20-year bond is basically, if you know, markets, the bonds pay interest, right? When interest rates go up, those bonds, the other bonds that are paying less, become worth less. So as interest rates go up, there's an inverse relationship to the price of bonds. Same thing. When interest rates go down, the price of bonds goes up. What is this chart showing? It's basically showing for the last 5 or 6 weeks that the market for bonds is moving higher. This is not the yield. This is the price of bonds. So the price of bonds is basically saying, we think that interest rates are going to drop. So the price of bonds is going up because the bonds that are existing are worth more, because the new ones coming out are worth less because they have a lower yield. And so the market's saying, you know what, Fed Powell, Chairman Powell, you can say all you want about what you think the market's going to do, but we don't believe you. We think you're going to have to pivot, whether it's a pivot or whether they're going to create more swaps. I do a lot of macro stuff, and they're giving some swaps behind the scenes, things you probably don't even know about. There's a reverse repo market that's becoming illiquid. The treasury market, this market here, is quite illiquid as well. There's lots of problems. The only thing that the Fed can do to solve them, they only can do one thing, and that's print money. And so that's what they're going to do. That's what they do. You can't paint brown paint on a zebra and expect it to be called a brown horse, right? It's a thoroughbred. It's still a zebra, right? So the Fed is a zebra, and they're going to zebrize this market, and they're going to print money. I don't know when it is. It might be a year from now. It might be tomorrow. Who knows? But I expect any day they might come out with some kind of announcement. Hey, we screwed up. We're overshooting. We want to be careful. I suspect it'll be in January, maybe even February, when they decide maybe we're not going to raise next time, or we're only going to raise a little teeny bit. All right. The Dow Jones transports generally lead the Dow. Now, you saw how strong the Dow was. It was strong until the last 3 days, and now the Dow transports has broken back below the 200, but still, it's up. Look at that trend. It's up, and now it's consolidating. So I don't believe the Dow transports are believing that the market's going to go down for much. We are red, and you've got to respect that. I play a probabilities game. I don't know what the market's going to do. I've been only doing this for 45 years. I don't have enough experience to know if it's going to go up or down. I could just tell you that the markets are not believing some of the stuff that's out there. And so I suspect once this tax loss selling that I think is going on gets finished, the big money stops selling, people start coming back into the market, we're going to be going higher. I don't know when that is, though, guys. I have to admit. Let's take a look at the weekly on the Tesla. And, this is a stock that a lot of people trade, so I talk about it. I've got a lot of this position. Unfortunately right now, but I couldn't predict. You can't predict what these things are going to do. I'll just tell you that the stock is right now what it was at about 2 years ago. And so if you go back to September of 20, we're at that same price level. There's a little line on there that brings you all the way back to September of 20. What the heck am I talking about? What does that mean? Well, in September of 20, this was a totally different stock than it is now. In 2020, this stock made 75 cents in earnings per share. Okay. Next year, it's expected to make $5.75 in earnings per share. Even though it's the same price, this is a different stock. Now, the stock price is showing that it's going down. Sure. That means there's more sellers than buyers. Supply and stock markets are supply and demand issues, right? So there are more sellers than buyers right now. There's people selling. Elon's even selling because he's financing this crazy Twitter thing that he's doing. I think in the long term, it's going to be okay. But right now, he needs cash. So he's selling out his shares. That doesn't mean he doesn't like his shares. That just means he needs money for something else. People sell for a lot of different reasons, and he's certainly one of them. Maybe he's even taken some tax losses. I don't know. Probably not if he's selling, unless he's writing it off Twitter. You never know. So that's what's going on. So I want you to know that even though I'm in it, it's painful trade. this is a different stock than it was 2 years ago, right? 2 years ago, they were making 75 cents. Now they're expected to make $5 more than that in earnings per share. So is it a bargain? I don't know. Maybe it's not. Maybe there's still more pain to go. That's a lousy candle on the right there. That's a lousy weekly candle. It's closing at the bottom, right around 150 today. This is printed from a little bit earlier today. So, I don't know what's going to happen with it, but I can tell you that there's going to be some point where people go, wait a minute, hang on a second. This stock is making $5 more in earnings per share. It's a compressed PE multiple, and it may go higher. Who knows? We'll see. I've seen some of these stocks go to, 20 from here, but, we don't know. I hope it doesn't, because I got a bunch of it. Apple, same kind of deal. Look at that lousy outside candle on the right. High volume, big price spread, accelerated selling on it. It's trading at the bottom. Now it's up a little bit from that bottom since I printed this chart. Not much, but a little. But, this is Apple, right? They're good. They've gone, 5 years ago or 3 years ago, they were making 328. This next year upcoming, they're going to make almost double that at what, 620. So this is not the same stock as it was 2 years ago, and yet it's still trading at the same price that it was trading 2 years ago. So there's some bargains out there. I'm not saying you should reach in and grab the falling knife. You're going to get a bloody hand, but at some point other people are. And when you see that starting to happen and you see the volume starting to come back in, maybe we'll see it at the end of the year in January, who knows? That's when you start your buys, right? Right now, it's too dangerous a market. Be careful, stay out, be in cash, whatever, but be ready for when we get a shift in the market. I always give you the market update. You can certainly use my opinion to make your decisions, but don't use my opinion for all your decisions, because that would be foolish. But if you like what I'm saying, we take our stocks. This is not a good stock that we like to invest in, Apple or Tesla right now. But long term, this is a long-term game. And so what we do is we own the stock, and then we have strategies around creating income from the stock. So if you believe that Apple's going to be around 5-10 years from now, or even 2 years from now, I do. If you believe Tesla's going to be around, if you believe Exxon's going to be around, then what you do is you own the asset and you use calls to create income from those. That's what we do. That's what we do every week on the Cash Flow Machine Mastermind call. You're getting just a little smattering of what we do on the call. We also talk about a lot of strategies on these particular stocks, but we have a lot of fun doing it. So, hey, listen, I hope this was helpful to you. The most important thing, guys, is not what's going on in the market. It's not making money. It's not losing money. You got to figure out that that's not your identity. Your identity, and this is a tough lesson for me to learn, but your identity is tied to your people in your life, right? So, go out there. If you haven't talked to somebody in a couple of years and they were important to you, reach out to them. It's the holidays. Wish them a Merry Christmas, Happy Hanukkah, Happy Festivus for the rest of us. Go ahead and reach out to people and really spend time and tell people that you love them. That's the most important thing out there. The money will come back, right? We've had a lousy year, 13 months of down, pretty rough bear market for a lot of people, pretty rough bear market for me and my investors. It's been tough, but you know what? I'm creating income every week, and I have to believe that spring always follows winter, right? And so since spring is going to follow winter, make sure that when we get into spring, you got the people that you love around you. And I wish you happy holidays going into the holidays. I'll probably do one more of these before we break for Christmas. And but anyway, I wish you a fantastic weekend, and I'll see you next time on the weekly update. Take care.